Morning, people. How are we doing today? It's Wednesday, middle of the week. Wednesday, April 24th. So, hope you're all doing well. Let's take a look at what we got going on because the main topic of conversation last night was probably Tesla earnings and leading into the potential of future tech earnings, right? There's decent expectations for tech earnings growth as well as companies and mainly tech coming to terms with the idea that we'll have higher rates for longer and continuing the trajectory to the upside, right? With that understanding, so it could be more bearish, so to speak, right? It could be a lot more bearish than what it is, and right now prices are kind of holding to the bull side on these words. So Tesla ran up about 13% here. Close to 163. It's down a bit from that area right now at the peak on Tuesday, sharply despite a sharp drop in Q1 earnings, deliveries margin, and as investors latch to automakers' commitment to launch more affordable models that can be produced on existing production lines. So Elon Musk, right, the CEO, also talked up the latest full self-driving software release, adding that Tesla is in talks with at least one major automaker about licensing FSD. Many analysts are looking at this and talking about the market giving Tesla credit for its vision and product roadmap despite its weak quarter. But investing group leader Jonathan Weber also warned that Tesla has considerable operational problems while still trading at a premium valuation. So with this massive gap up, right, things up about 20 bucks, we can say, right, just shy of 20 bucks, 15 $20 gapping here pre-market. We'll see if that momentum continues because it can spur for stronger earnings than a lot of the other tech names that are coming to light later this week. So we had some news as well, right? Googly here, Googly Moogly, is delaying its phase out of third party cookies on its browser Chrome for the third time because of regulatory hurdles, and now expects the process to start early next year. We recognize that there are ongoing challenges related to reconciling divergent feedback from the industry, regulators, and developers, and will continue to engage closely with the entire ecosystem. The search giant said this recently. The announcement came days before the quarterly status report from Google and its UK Competition and Market Authority of the phase out of third party cookies, which will be replaced by private sandbox technologies to improve consumer privacy. So, the phase out, which will transform targeted advertising, has attracted regulatory scrutiny over concerns that the move could further boost Google's dominance in the digital advertising market due to the increased reliance on first party data and its advertising platforms. The UK Information Commissioner's Office last week told the CMA, which is overseeing the phase out, that Google's plan has gaps that advertisers can exploit. It's crucial that the CMA has sufficient time to review all evidence, including results from the industry test, which the CMA has asked market participants to provide by the end of June, said Google. We remain committed to engaging closely with the CMA and ICO with hopes that this process could conclude this year. So we've seen Google has just been constantly on a leg up, right? These guys have been positioned and climbing higher and higher, barely affected by the most recent drop in markets, and we'll see how the earnings shape up this week, right? Eyes on Google that come out tomorrow. I believe Meta comes out tomorrow as well, if I'm not mistaken, and Microsoft as well. Meta earnings are out today, right? Meta earnings are out today, so huge massive eyes are going to be on Meta as well as Microsoft and Google tomorrow that wrap up the week in these big earnings, which could lead us to the next realistic move, right? Is this bounce in this market a dead count bounce, or is it something that's going to be more significant that tries to push prices even higher? Apple has been one of the ones that's struggling recently. It's trying to push off that mid 60 right, 160 right now, but we'll see, right? The company has spent years preparing for a phase out, following in the footsteps of Apple and Mozilla, which already have options to block third-party cookies on their browser. And Google even began restricting cookies in January for 1% of the Chrome users as a part of limited testing. However, it's delayed its phase-out deadline twice already since it was originally set in 2020, giving advertisers more time to prepare for the changes. So again, like I said, we'll see how these things shape up with the earnings reports that could give us a very good understanding of where this market wants to head. As I look at it with the SPY, we're in a position where they're bouncing fairly aggressively for a V, but I think we come into some trouble as the SPY prepares to tag that 10-day moving average closer to that 5110. There are, on the futures as well, there are some unfinished auctions that sit above, right? There's gamma positioning by dealers that suggests the squeeze to the upside to continue. So we'll see how these things play out pretty much this week, right? We need to hold a bid through some key levels that I'll talk about on the S&P 500 futures to sustain some of this market upside. We also have news of the FTC, the Federal Trade Commission, voting for a ban on for-profit employers from making workers sign contracts with non-compete clauses, which the regulators said kept wages low and hampering innovation. So non-compete clauses ensured that employees couldn't join their employers' rivals or launching competitive businesses. And the FTC chair, Lena Khan, said that the ban, which will be effective in August, will result in more than 8,500 additional new businesses created each year. The ban lacks all nuance and will expose the trade secrets of American companies and harm investors, including pensions, foundations, and endowments, warned Jennifer Hahn, chief counsel at trade group MFA. The final piece of news information before we take a look at these equity futures is BitDance, right? The Chinese parent company of TikTok to sell the social media app, right? That the bill. We keep talking about this. Or else will force a ban in the U.S. Past the Senate Tuesday night. The measure was attached to a larger $95 billion foreign aid package in support of Ukraine, Israel, and Taiwan. And President Biden has voiced his support for the aid package as well as the TikTok measure. And if he signs the bill into law, BitDance would have about 9 months to divest the app. And if the TikTok bill becomes law, Meta platforms, Google, and to a lesser extent Snapchat stand to gain the most realistically. So let's take a look at these equity futures here as it stands, because we were looking for some potential continuation to the upside swing on the overnight, and they tried it, right? They didn't get too far because we got a decent move. We got a decent move here from the overnight, holding this barrier around 51.8, 51.10 area, trying to push back into the tops of this 51.24 area. If we can make a move past that, what happens is we enter an area of low volume that was created on the push lower, right? A region that we've tested several times here, and we have a low volume block that allows prices to pass through very cleanly to complete that auction before seeing a little more downside. That's the way I'm looking at this. So if we get that press higher, we would want to make that move above that 25 so that prices can clean this auction before going lower and really solidifying a lower high. Right now we're above these distributions. We're about to open above that distribution. Big sellers hammered prices lower from that area, which was a little concerning for the buy side realistically. And if we start losing that 51.05, honestly, we could be entering back into that distribution, and this buy side could indeed be over. So it's going to be, again, this is the real test. This is an area that last week, I believe it was April 15th into the 19th, we had four different sessions tested the tops of this barrier to attempt a rise above that 51.25. With 4 failures now, we've come into 2 failures overnight alone. So this is it, right? For the bulls, this is going to be their real win. If they can do this, that's going to be a major win for them, and then we'll see how far they can kind of run this. But otherwise, odds are against them right now. They're expected to fail, and I'll be looking to play that, right, whether the structure breaks down or not realistically. Right now on the NASDAQ, very similar thought process goes on. NASDAQ, however, is structurally weaker over the last few weeks. We haven't necessarily gotten back above that 960 area, 17,960, which is a main target along with 18,000 to the upside. As long as we can hold around 600 or 660 today on the NASDAQ, I think that they can try to get that push. But like the S&P, they're kind of running into areas where it would be a lot more difficult for prices to break through on the bull side. So 2 days of buying, right, if that's thwarted in a single day today, I think we could possibly even look for new lows to even end this week. So they're going to really have to jump into this and pump to the upside if there's going to be that kind of continuation. So why don't we open up our live trading room this morning, see what the futures are up to, and see what kind of trades arise from that. And we'll chat to you guys tomorrow as we uncover, what was it? I think meta earnings tonight. So that's going to be another mover. Let's see how that shapes up. And we'll chat soon. So take care, everyone. Check out community.tradeproacademy.com, and we'll see you guys tomorrow.